All right, good morning, everybody, and welcome to this live session, being Friday, the 23rd of February 2018. Well, on Fridays, we usually have just one live session, and which is this one here, because it is weekend and we need to take a break. Today's market, I mean the forex market, is a bit difficult to trade. It doesn't offer much trading opportunities. We hope the price action itself will keep getting better and better. Okay, it hasn't been a bad one, but it's been really slow and making some profit out of the market. Well, if you are joining in for the very first time, please, as you click on your play button, ensure you are moving to the settings tab. Set your video quality to the 480 pixel so you can get a better stream quality at your end. All right, looking into the Forex Factory economical calendar, we have seen this yesterday. We have just one high impact news announcement coming from Canada. So all Canadian dollar crosses will be affected within this news release hour. So you have to be careful trading all Canadian dollar crosses, the euro against the Canadian dollar, the American dollar against the Canadian dollar, and so on and so forth around this news hour. All right, let's since it's the only live session, let's look into the charts in general. Just analyze all of them one by one. Okay, this is the euro against the American dollar. Remember yesterday I told you about the possibility of a range formation, that this might be the end of price action for this week. As price approaches the daily level of support that we have already outlined, this level of support here, it is bound to find some hesitation around that area. So I think the range within that area is already building up. You can see how price is already giving us that swing up and down there. This is support zone. Don't be surprised to see another bounce of that area to the upside. Well, this support level might come into patterns. It's either it is a standard range, or we might have price, just like we are already seeing, give us a channel formation. Of course, the if you find this type of channel formation, you are already getting the hint that price is about to reverse, that price is about to push to the upside. So if you are an aggressive trader and you are looking to trade the euro against the American dollar for today, you will not be hitting your buy button somewhere here. You want price to dip below, somewhere around in the air, around the possible area of that channel. That is where you want to look for your possible buy entry. There is no value setup here for us in line with our core trading strategy. What I am showing you here is an aggressive approach, and you are taking that trade at an optimal area around a daily level of support, around that area. So your stop loss should be hidden few pips below the previous swing low. That's the previous swing low. So this is the stop loss area around in here. So price is expected that price should not take out the previous swing low. That's this one here, because we are having higher swing lows. So price is expected to bounce somewhere in the air to the upside again on this flat top triangle. All right, that's it. Range trading, euro against the American dollar, more downside should be seen for today. Price should come somewhere in the air. From there on, it should have the possibility of bouncing to the upside. No entry for us, no valid setup. We are going to pass on this one. Let's see the American dollar against the Swiss franc. We took it an early trade here, anticipating that channel formation for the American dollar against the Swiss franc as of yesterday. The channel itself has confirmed the bounce to the upside. That's a confirmation of that bounce, that price is likely to go back down. Looking into the weekly time frame, I am liking what I am seeing, with more confirmation that price is likely to go down for next week. I wouldn't want price to push too far hitting our entry at break-even position. I wouldn't like to see that. From what I am seeing in the 4 hours time frame, it's a good one. Any moment from somewhere here, price can turn back down. So let's keep that trade running. We will keep it over the weekend. All right, so we are going to mark yesterday's low as our key level of intraday support. That's it. Nothing much. No entry given. No further entries. Just let it be. Now, the New Zealand dollar against the Canadian dollar. Yesterday we placed a buy, a sell limit order around an area we considered as being optimal for price to hit and bounce back down. Yes, in yesterday's part-time market analysis, I was telling you that I am not really sure if price will make it up to that area, and it started coming back down from yesterday. The order wasn't triggered. That order wasn't triggered, and so we are going to delete that order. What I like to see in that with this aggressive approach is price moving on straight to that point, then coming back down. So we'll delete that order. Simply right click and delete that order. Okay. All right. In the shorter time frames, this is not an area you want to hit on your buy button. This pair is overbought. It has been overstretched. It is time for price to begin to look for a downside. So don't click on your buy button. All right, in the 1 hour time frame, this level of support is now being messed up. That's a key level of support, but look at the type of price action we are having there. It is not really looking good. So let's just keep it for now. We can also mark this previous one. We can keep this. Now, you want to ask yourself, within the intraday time frames, where is the optimal area that you could click on your sell button, since we have already established that the New Zealand dollar against the Canadian dollar is trading around an overbought area. Where can I click on my sell button? Well, if price is able to make some pushes somewhere around in here, it's where you can click on your sell button. That's an aggressive entry. That's because you can see the early trend formation there. Do not underrate this price action. Okay, right there at that top, it's an early trend formation. If price makes any pushes to that zone, it is likely to come back down. In fact, let us be more accurate. Maybe something like that. And you know, we had the previous swing high right here, popularly the shoulder, the head. If price is able to come back somewhere in there, you might be finding another shoulder before the drop back down. So in the intraday time frame, somewhere around in here is the optimal area to look for short opportunities. Still far away. Remember, I told you that the New Zealand dollar might be losing some strength and momentum. Okay, nothing to trade here for now. The sterling pounds against the New Zealand dollar. Finally, price came to our entry point. Well, we were not even in the market when this happened. Okay, remember yesterday we were talking about the this line here, this very line. If you remember, I talked about this being the bear zone. Okay, and that's as long as price was trading below this area, below this line, it was still bearish. But once price breaks above that line, well, the bulls will be ready to drive price to the upside. That was what happened. We got that ugly breakout, we got the pullback, then the continuation move, a straight move. Okay, that trade is still sitting right here. In the daily time frame, I told you yesterday that whenever you have a losing trade, that is when you analyze the market the most. So it's a channel in the daily time frame. It's a channel. Price hesitated around this area for just too long. Right now it's that's pushed up, and so it is time for us to search for long opportunities. So we'll just keep searching for long opportunities with the sterling pounds against the New Zealand dollar. All right, let's look into the 1 hour time frame. Delete this line. Price has broken a key level of resistance. Keep this. It is still bullish. What's going to happen here? I don't really want to close this trade now. I want to give it a little more time. Let's see what's going to happen in a few hours. Okay, let me see the Insight Oracle indicator. %74% correlation. That's not good enough. We want it at least 75%. Okay. All right. Let's see the monthly time frame of the sterling pounds against the New Zealand dollar. We were actually in the right direction, and that is what gave us the impression to go long. In the monthly time frame, you can see how we got that swing high right here. Okay, price took off that swing high, and it seems we now got a pullback to retest that previous swing high. Can you see that? So for a continuation move, it's all about patience. It's all about being having the nerves to keep that trade. It is usually not easy finding your trade in some losses. Okay, at this particular level, it's expected that price should push to the upside in momentum. Well, that usually happens for most traders that have the nerves. If you keep this trade for a few more months, you'll be surprised to see your profit somewhere around here. Anyway, we are always taking trades at an optimal area where, and in the very right direction, where we have high probability of coming out of the trade in case we are tired running the trade. For the sterling pounds against the New Zealand dollar, I'm just going to keep this trade a little bit more longer. Let me see what's going to happen. Okay, I can now move my stop loss a bit somewhere in here where the breakout pullback continuation pattern took place. So I just keep it below there. Okay, then yesterday I told you about the euro against the sterling pounds aggressive entry I took just in the middle of that this possible range. Well, it is sitting in some profits right now. I wouldn't want to risk this. Let me just trail my stop loss to our break-even position. Okay, it is now risk-free. Stop loss has been moved to our entry plus spread, so I just keep it running. I'm going to keep that trade running till the end of probably before the market close today. Remember, we analyzed the weekly time frame where we talked about this rejection candle in the weekly time frame. That rejection candle was what all traders was looking for. Majority of traders, as the next candle is expected to be a bearish one. For the entire week, this is the fate of the euro against the sterling pounds. It seems to be playing out, but quite slowly. Yesterday we did analyze this. If you watched yesterday's review in the daily time frame, we talked about the possibility of price still coming down. If you analyze the entire bounce, whenever a bounce is established, try to analyze the individual candles themselves. As you can see here, this is a railway track showing rejection of that area. Price came down immediately, was rejected with that bar. That's a bounce. Price went up, came back down again. You can see a pin bar right there. That's rejection. Price went up, came back down. You can see that long pin bar again. That's rejection. Price went up, came back down. Any bounce candle yet? I don't see any bounce candle. Rather, the bounce candle I am seeing are candles that are suggesting the fact that price should push to the downside, and that is why I am still holding the euro against the sterling pounds trade. I am sorry if I am really beating around the bush. This is not just a signal service, it is an educational platform where we actually learn price action to master how this thing moves. All right, an inner level of support for the euro against the sterling pounds has been broken, so we'll just place that line there. If price comes above that level, then there is definitely going to be problems with this trade. Price should stay below this level for the rest of today. It should stay below that level for the rest of today. Okay, so I'll keep that. American dollar against the Japanese yen. Let's see. Still looking very bearish. Actually, this is what it should be. If you took a trade here in the let's delete this line. This is not a very good line. If you took a trade here in the American dollar against the Japanese yen, please hold the trade. We did analyze this level as being that level of resistance. If you took a trade here, hold that trade. The next candle for next week should be this. It should be a bearish candle. All right, so it's an opportunity zone. This is an opportunity zone for us to make money. The bearish move has just started, so let's keep that. Where is the next point? To click on your sell button. We'll be looking for an aggressive entry around the 107.27 area, somewhere around in here. Price is likely to come here, then come back down. Let me look at this again. Okay, it's a triangle in the monthly time frame, so we have all of this room for price to push down. And as you can see, there is no level of support within that area, so it is a highway free of traffic. Let me see if no, that's not a valid level of support. Sorry, I'm looking at the possibility of any support level against our trade if we are going to click on our sell button, possibly before the market close for today or early next week. All right, let's place a sell limit order in the American dollar against the Japanese yen. All price action indicators are pointing to the downside. That means this pair is still bearish, so let's place a sell limit order. Get your lot size calculator ready. I hope this is going to trigger for us. Look at this. we always want this to be equal to this. Okay, that's the entry zone. This is the stop loss zone. This is the possible first profit target area. All right, so let's take this trade. Let's place a sell limit order. The directional bias is to the downside, clearly to the downside. So let's see if we can get an entry here. So with the lot size calculator, which I already have, for those of you who are just experiencing that for today, let me apply the lot size indicator freshly. Now this is the possible entry level, which is of course entry is 107, sorry about this, 107.24. the stop loss is 108.91. okay, in pips, that's the difference between the entry to the stop loss. I told you use your crosshair tool. You don't need to be too accurate, just take an approximation, say 166 pips or so. 166 pips, that's the difference. That's the only information you need to use the lot size calculator. So I'm going to apply the lot size calculator now. 166 pips. Okay, let's risk 2%. This is a trade we should have risked at 3%, but let's risk 2% for this trade. So 2%, I'm going to place click on it. All right, you can see the lot size recommendation here. The stop loss value is 166 pips. I'm risking 2%. It is recommending a 0.94 lot size for this trade. That means if my stop loss is hit, I am not going to lose more than 2% on my account, okay, which is okay. That's what I am ready to risk. So I'm going to place the trade. 0.94, that's the recommended lot size. It is a pending order. It is a sell limit at 107.24. Stop loss 108.91. If you are not clear about this, please ask questions and I will explain that. Okay, I'm going to place the order now. Order is now placed. Okay, profit target is open. Keep your profit target open, but your stop loss must be in place. You always want to keep your stop loss in case anything happens in the economical world, in the fundamental world. Probably will get one on scheduled news announcement, price spike heavily. Well, you are only going to score that loss, and if price spike in your direction heavily, then you are going to make that many pips. All right, so that order has been placed. That's intraday resistance. This level of support is not really clear. Well, let's just keep that line there. Delete this one. And our order is around that area. That's day before yesterday's low, just around there. So if price had pushed to the upside, it should trigger that order, and we expect price to come back down. All right, so that's it for the American dollar against the Japanese yen. The New Zealand dollar against the Swiss franc. For those of you who followed this week, and for those of you who got your order triggered, you would have made some nice profit. Remember, we placed a sell limit order right here. You can see it's an optimal area where price was expected to make that turn. Still very bearish. Mark this level. This is now the key level of intraday support. If price makes any push to that area, it should come down. Sterling pounds against the Australian dollar. We did analyze this pair where we advise that we stay bullish, even though the price action is a terrible one for so many days. Now this is what is this is the price action we are seeing here. It seems something new is forming right now. Could that be? Okay, it seems. Not looking good enough, but it is a possible channel formation. Quite an ugly one. So let's just be simple enough with our lines. Mark that as an area. Keep this as an area. Alright, nothing for the sterling pounds against the Australian dollar. Australian dollar against the American dollar. Price is still struggling around that level of support. This is an optimal area, of course, to look for long entries. But the price action itself is really bad. We can keep this trend line in the 1 hour time frame for a possible trend collapse entry. It's a nice trend line, it's a solid one, an outer trend line. So let's wait and see if we can get a solid breakout, then a pullback to look for that trend collapse entry. All right. So you shouldn't click on your buy button here. You should not click on your buy button yet. Follow price action in the 1 hour time frame for a trend collapse entry, as we have already established that price is at an optimal area in daily time frame for possible long opportunity. So let's look for that. It is also possible to find this type of price action. You know, momentumless markets are always you see so many channels formation. Okay, Australian dollar against the American dollar. Let me take a look at this again. All right, we could take an aggressive trade here. Let me look at this. Do your homework correctly, so you don't once we take the trade, we don't need to start regretting. All right, now this is what I am doing here. This is the analysis I am conducting here. I am seeing the possibility of a channel formation, an early channel formation for the Australian dollar against the American dollar, and at this point it's an early point to cash any valid long opportunity of that area. Well, if that doesn't hold and we get this counter trend line leg as the next level of support, okay, that's the last level of support for price to bounce upward, then our stop loss should be somewhere below that area. All right, so we don't keep moving that stop loss as we take the entry. So we take our final decision, calculate our final risk, and take the trade. There is no need to waste time, delay here for this small aggressive trading opportunity. So we are going to take a buy entry of that level. Okay, let's do that right now. The stop loss should just be somewhere here. I know that is looks a bit too much. Okay, stop loss entry to stop loss value in pips. You must always calculate your lot size. It's about 140 pips, where the entry is at 0.7820 level. The stop loss is at 0.7679 level. Okay, I talked about 140 pips, right? Am I correct? 140 pips. 140 pips difference. Okay, so we are going to apply the lot size calculator. This is a must. 140 pips. We should risk 2%. This is a straight buy. We have already seen that, so there is no need to even take that off the 1 hour time frame. So I'm clicking OK. The lot size calculator is recommendation is here. 140 pips stop loss, 2% risk. It's recommended 1.04 lot size. So I'm going in straight on with that trade. 1.04. My stop loss 0.7679 level. Okay, so I am clicking on my buy button straight on. I am sure I have done all my homework correctly. Stop loss seems safe. Okay, before you click the final button, look at the chart again. All right, homework is correct. Entry is done. So we'll keep that trade. Okay, so stop loss is safe. Anyhow, if price breaks below, we will have the opportunity to get out of the trade before final stop loss is hit. I am sure the directional bias is great. Price should be pushing to the upside. Just keep that trade. Okay, let's move on. The Australian dollar against the Canadian dollar. This is not over. We might be seeing price pushing for next week, either for a breakout or a bounce. This is the key level of resistance there. So we are still watching that. Price is very close, not doing anything. Nothing to trade here. It is making a little pullback. You should not be clicking on your sell button around Fibonacci retracement soon. That pullback is into the Fibonacci retracement soon. So don't click on your sell button against that level. Prices has the possibility of bouncing off that area to the upside. The Australian dollar against the Canadian dollar. Anonymous 9700, your chat is empty. I didn't see any message there. Okay, Canadian dollar against the Japanese yen. Still some room to go. Still some more downside to go. Still bearish. No entry given. Euro against Australian dollar. Euro against Australian dollar, we might have the formation of a new price action, of a new price pattern. This is an extremely difficult market to analyze and to trade as well. Okay, for the euro against the Canadian dollar, if you are looking to trade here, you need to stay bearish. Price seems to be pointing to the downside in the very long term. but it's a murky market. There is nothing there to trade. Euro, New Zealand dollar against the American dollar. Okay, nothing here as well. The euro against the Japanese yen. The live session has started long ago. I am sure Michael is not seeing my screen. Someone could help me tell him that live session has started long ago. Euro against the Japanese yen, we discussed about this, that price is likely to come down there. From there on is where you can look for your buy entry. In fact, this is seems it has enough room to go to the downside. Thanks, James. Thanks for that. So it seems it has some room to push to the downside. Very bad price action. Euro against the New Zealand dollar. Seems I am giving back my. Okay, let's see this. Something interesting here. Euro against the New Zealand dollar. We have the possibility of a trend collapse strategy set up here in the 4 hours time frame. That's the outer trend line, a very nice trend line which has been broken to the upside. So let's wait for the pullback. On the first green candle close, we'll be taking our buy entry in the euro against the New Zealand dollar. It is a valid trend collapse setup, so keep this on the radar. The outer trend line has already been broken, so we now have a highway free of traffic. Keep the euro against the New Zealand dollar on the radar for today. I'm just going to scan through our other pairs. There's no need to waste much time here again. Okay, no trading opportunity there. We will conduct a more in-depth analysis over the weekend on Sunday. Okay, I think that's basically all for now. We have a trade in the Australian dollar against the American dollar. Okay, euro against the sterling pounds, doing it right here. I like what I'm seeing. I wouldn't like to see this just bounce off that level. I want price to make that pullback. I want this trade triggered. If not triggered for this week, then we'll keep it until next week. Alright, so that's basically all. The euro against the sterling pound is looking quite bearish for today. I hope price is going to push to the downside. I wouldn't want price to go above this level, so just hope it's going to keep pushing to the downside. Thanks for watching. If you have questions, contributions, please feel absolutely free to post them in the live chat window where we'll address them together. It's been a difficult week, but not a bad one, even though we have made a very little profit from those trades. So we hope next week is going to get better as we look towards taking trades at very optimal zones, so we get to make some profits out of them. Trading today's or current price action is not really easy, but you just need to be patient. No, this is all the session for today. We will come back on Sunday before the market open to analyze the weekend, to conduct the weekend market analysis, finding potential trading opportunities. If there is any in the long term, I am sure that session will span towards the market opening. So if there is any opportunity, we are going to take them as the market opens on Sunday. So we are having a nice rest from now till Sunday. Thanks again. Okay, Michael, you want me to look into the sterling pounds against the American dollar? Okay, let's do that. Let me just go into that. Sterling pounds against the American dollar. All right, the sterling pounds against the American dollar. This is what I did analyze as of yesterday. This pair is in a small channel. It's in a small channel. The overall directional bias for this type of channel is to the downside, but we are only getting the confirmation of the lower leg. That means for now, price is likely to push up again in the sterling pounds against the American dollar. If you are taking a buy entry, this is the time to do that. Hiding your stop loss, maybe a few pips below the previous swing low, somewhere in here. My screen should be on. My screen should be fine. Screen is on. Okay, so this is the area to look for that buy entry. Price should be targeting that level of resistance again. It's a small channel formation. This is an early channel formation for the sterling pounds against the American dollar. Okay, but be careful because this overall channel, overall ends up being bearish. Okay. Oh, sorry about that. Okay, sorry about that. I am in a hurry to go for my weekends. Okay, you can see the screen right now. I am sure the sterling pounds against the American dollar. This is what I was talking about. That price in the daily time frame, it's in this pattern. This is what is currently happening right here. Okay, it is still very early, so it is right to look for long opportunities of this level, with stop loss hidden below the previous swing low. Okay, price is likely going to hit the upper boundary of this channel leg. So this hesitation is just within this box. Okay, it's within that box. Are you serious? The should be screen. Yeah, my screen should be on right now. Okay, thanks, Mike. All right, so I was saying that the price action here in the daily time frame is within this box. Okay, just within this box, and if it is within this box, that means the next directional bias should be to the upside. Okay, to challenge that upper channel leg. And if you're taking an aggressive approach here, then your stop loss should be somewhere around the previous swing low. Your value from the entry to your stop loss is quite wide, so please calculate your lot size. You must use your lot size calculator. All right, that's basically it. I don't see anything much for now. Even looking into the weekly time frame is not necessary. This is just what is happening right now, and that is what applies even to the intraday time frames. Right there, push to the upside. If it breaks down, then that pattern has come to an end, and that is why you must use a stop loss around here in case price breaks to the downside. Okay, so it takes that little loss and you are out of the market. All right, so that's basically it. Okay, let me see the daily time, the 3SM indicator as well. Okay, Mike, this is also a good thing. This is happening around the dynamic area of support in this case. So if you we have a counter trend line. Actually, before you want to go long, if you're trading the 3SMA indicator system here, you should wait for that retracement trend line to be broken in the 4 hours time frame. The 4 hours time frame is a trigger chart with a breakout pullback, a continuation pattern. But actually, this is an optimal area to go long. The sterling pounds against the American dollar is still a very bullish pair. Price should be pushing to the upside. I am already involved in the Australian dollar against the American dollar, so that is why I wouldn't be clicking on my buy button here. If not, I would have done that right away, clicking on my buy button, my stop loss somewhere around in here, also few pips below the 50 simple moving average. So my stop loss will just be there, the entry will be somewhere in here. But as price approaches the retracement trend line, which is that one there, you want to cash out some profit before price bounce off that level against your stop loss. Okay, all right, let's wrap it up here. We'll talk again on Sunday before the market opens. As per the timer counter, the countdown right here in the live session, in the live trading room, that's time countdown. We'll see how we can fix that so we all get the same time countdown. For all of you who've been here, thanks so much. Your contributions are really good. Do have a fantastic weekend and talk to you again on Friday. Bye for now.